A very big Monday morning here on Business Morning. Of course, all systems go today. The first full trading week in the month of January and in the new year 2020. We welcome our viewers here in Nigeria and around the world. I am Bosin Amafaye. Let's get started. No respite yet in the US-Iran rhetoric of drums of war over Iran's military general Qasem Soleiman's early Friday killing in Baghdad by a US drone. This morning, oil prices continue to rally with Brent futures reaching $70.14 per barrel and gold leading the metals rally across board more than 2%, 1,575 an ounce as we speak. Now let's go back to the global story. Let's check the markets now and see if the playbook for 2020 is changing with the rhetorics between US and Iran over the weekend over the killing of Iranian top military commander in Baghdad. Let's get across to Uchenna Minis, who is managing partner at Blue FX Nigeria. Is live to us from the trading floor of the Nigerian Stock Exchange here in Lagos. Uchenna, good morning. Let's get the conversation going from what we already know. And how much do you think the playbook for 2020 is changing with the latest developments in the Middle East?
Good morning, Boston. Every market participant, stakeholder, analyst, portfolio manager right now, given the recent happening between the US and Iran, would look to change their method of approach as regards to their outlook going into 2020. This changes everything. This changes everything in terms of what risk is now being priced into the market, the levels of uncertainty in the market. This changes everything literally. We can see asset classes responding in kind and in accordance to the current risk right now. And make no mistake, Boston. Make no mistake, Boston. This is novel. We are in uncharted territory. There is no playbook for this. There is no playbook for this. This is not if Iran will respond. It's when Iran will respond and the magnitude of when Iran will respond. This is where we are now. And everybody needs to be on their front foot as regards to this risk.
Okay, right now as we speak, early today, Iran overnight says he's pulling out of the nuclear agreement, says he doesn't want to observe that anymore. Meantime, we've seen some tweets from the U.S. President Donald Trump talking about hitting some targets, and Iran giving a list of what they consider to be targets. They are also targeting of the U.S. In the middle of this, we are in a very critical week where Chinese team are getting ready to leave Beijing to head to Washington to put pen to paper with President Trump and his team over the trade deal that has cost the market and the global economy so much in 2019. So we have some good news coming through on the trade talks front. At the same time, this is hot water all over the Middle East as we speak.
Yeah, so right now, Boston, right now, the Chinese and the US, the trade deal, it doesn't matter. It's water under the bridge. This issue, the US-Iran escalation, or possible a World War III, if things even get more deteriorating, it's huge. So, is there going to be any significant with a trade deal when there is a world war? Those are the things we need to really understand. They can come in, but would see a very, very lethargic response as regards to the market based on the trade deal being signed. It's just ceremonial. It has already been priced in, but right now the risk, the status quo, everything is kind of delving towards what Iran would do and what US would do afterwards. So this is basically where the market is being focused right now.
I checked about 10 minutes before I came into the studios. The dollar index, the DXY, was doing a little bit positive, trying to hold on to some little gains. Now I'm looking through, it's gone into negative territory, 0.1%, reading 96.75. It was around 96.80 a few minutes ago. So you're in the FX market. What's the playbook here for this crisis period we're in just into the new year?
So basically, what we'll be looking at now is we'll be looking at safe haven assets getting to appreciate in value. We can see gold rallying on the back of this risk. We also are seeing the Japanese yen and the Swiss franc as taking a hit. And we expect the dollar to also not perform well in this case because this is directly involving the US. And in the sense of that political or geopolitical uncertainty, that can also start to see that risk downside pressure on the US dollar. So we expect the US dollar in the near term right now, if things continue to go as it is, we expect that to continue to depreciate. We expect risky assets also to perform or underperform in this regards now as regards to this risk. But we're looking at safe haven, the gold asset appreciating in value. We're seeing also very, very key. That's oil prices. You've mentioned we're already trading above not of $70 per barrel, as it were. And with the risk now that's been priced in with Iran, there's also the Iraq factor too, because the parliament in Iraq has deliberated that or decided that the U.S. troops should leave Iraq immediately, and that in itself, Donald Trump has responded that that would not be happening, and if that's going to happen, there's going to be intense economic sanction on Iraq, and this is supposed to be an ally to the U.S., and if Donald Trump is looking to hit Iraq in terms of significant economic sanctions, we will expect oil prices to soar even higher than where it's currently trading. So we are having all of this risk, and it's already getting too busy before, and we're just in the first week of January. So it's something that we need to really pay attention to. And we're expecting significant volatility in the FS market across asset classes.
Okay, this problem, the latest crisis actually came to the fore on Friday, early Friday, with the drone attack that killed Soleimani, the Iranian military commander at the Baghdad airport. So between Friday and this morning, what's the temperature, if you can feel the gauge of the FX market? You're a trader, and I'm sure you take phone calls, you look at the trading engine all the time. So what's the temperature here? What's the reading? What are you learning?
It's quite high, Boson, I must say. It's quite high because, as I said, we are in uncharted territory. The killing of Qasem Soleimani is huge in all regards in terms of geopolitics. So we are seeing that playing in the market. We're seeing very, very nervous, should I say, fingers as regards to asset classes and how it's been traded. And we expect that to continue to be the case. So if this continue to escalate and you get Iran also respond in kind, Donald Trump has literally vowed that he would hit them back. So basically, when we start having such intensive view as to what would happen in the future as regards to this current situation, that is literally has put that temperature on the high side when it comes to market participants and also stakeholders on the market. So yes, temperature is quite high in the market currently, and we don't know what to expect.
We don't know what to expect. But the dollar is considered a safe haven at some point for folks who finished off with December and think, look, this is a blue ocean, new year 2020, let's just move on. Then they've taken some positions toward the end of last year, and suddenly out of the skies is this drone attack, taking out one of the top military and political diplomat, whatever it is, in the Middle East, who's, of course, U.S. considered as an enemy here. So with this happening and the rhetoric that is getting hotter than before, do you think folks will need to rethink their position in dollar assets as we stand right now?
That is what is literally happening, because the U.S. is in the forefront of this, and I need to just correct that. The U.S. dollar can serve as a safe haven. So it is not a conventional or a traditional safe haven asset. It can serve. And when it serves, for example, during the 2019 financial year, was because compared to the rest of the world, the US and the rest of the world growth differential was quite high, and investors only search for yield and an economy that they feel was stable and also will provide significant yield on their investment. But that's not the case if the US is going to be in the forefront of the war. So if that's the case right now, we would expect the US dollar to depreciate in value if things or situation between the US and Iran continue to escalate or deteriorate as it is. So yes, right now, if things get worse, we would expect the US dollar to depreciate in value.
It's very surprising, isn't it, Uchenna, that even the cryptocurrencies are taking advantage of what's going on, what's happening to the dollar, what's happening in the Middle East, what's happening to stock markets, taking a big dive across board from Asia to Middle East even this morning. So I'm looking at Bitcoin dollar right now, more than about 2%. Even Ethereum is close to 3.5%. It looks like everyone is trying to game this particular crisis scenario in the Middle East and try to see whatever advantage they can take.
Yeah, so when it comes to cryptocurrencies, it becomes, we're not exactly sure the dynamics with the fundamentals, but one thing that has been quite proven over the period is every time we have an increase in such risk, in geopolitical, political tension, we can see such assets sort of start to appreciate in value. It sort of shows investor sentiment saying that, well, if we get a possible world war, then the fiat system, the normal monetary system will be destroyed, and cryptocurrency, which has that decentralizing technology, would help and be more viable during those periods. So you can see that investors are sort of front-running the risk and also going to diversify their portfolio in assets they feel would not be touched or affected if things get to go to worst case in terms of world war and other things. So you can see investor sentiment. Basically, that's what's driving the price of Bitcoin and other related cryptocurrencies.
So cryptos is kind of positioning itself for whatever happens. If you guys get your head lost over whatever is going on, if you get into fight, here I am. I can serve as a currency of alternative positioning, because this is quite a big jump right now in the new year for cryptos. But again, in terms of the playbook, and this is how we're going to wrap it up, well, what does it all mean here for emerging and frontier markets such as Nigeria, the dynamics of war as we have it on our hands right now, even though we're not yet at war globally?
Oh, I think in terms of the effect in terms of global asset and the way Nigerian economy is structured around oil pricing, I think it's kind of a good deal for us in terms of what would happen with oil pricing when those regions get to be hit, and also supply constraints as a result of these things. Nigeria in itself will be able to latch on the positivity with that oil pricing surging as a result of such unsettlement in those areas. And also, when we have a weakening dollar as a result of the U.S. Putting itself in the forefront in the war, that also helps Nigeria in terms of the devaluation in US dollar, and that helps us for that in that regard in terms of our debt holding and also how we can have such strength in our investment portfolios, basically. So yes, we can also expect that difference, having investors also move into a margin market space where they feel yield will be higher. But basically, it's just that dynamics, the way we're structured. I'm not saying generally that's a good thing, because world war is still a world war. It's global, and when the US is involved, that is still going to have its own detrimental effect. But on the surface thing, on the first look or first glance at things, you will expect Nigeria, on the back of oil pricing surging, to really benefit on the back of this whole thing.
Okay, Uchenna Minis, thank you so much, managing partner at Blue FX Nigeria. Thank you so much for raising the curtain on the global markets now and with some implications for the frontier markets here. Thank you so much. Have a great day.